Okay, I think I'm live. Let's uh let's find out. Let's see if YouTube gives me my notification. There I am. I am now live. Okay, let's run through some questions here. Let's see what we have. Will there be a new video of CAR in the modeling section? I think we finished it. I guess I can go back and look at where we ended, but I thought we had gotten to a conclusion. Remember, we weren't doing a supply side modeling; we were doing the buy side, and the buy side is till you have enough confidence that what you're buying makes sense for you. We're not trying to complete the whole balance sheet, income statement, cash flow statement. It would add no value. All we really were going for was the projection of funds from operations, and we got there. I don't know if you could be more specific on what you feel I should add to it. I can add to it. Understand why you like gold. Well, why do you like Bitcoin? I mean, ask the Bitcoiners why they like Bitcoin. Limited supply. The supply halves every 4 years. There'll only be that much Bitcoin, and that's it. Same with gold. There's not an infinite amount of gold. There's only so much gold in the ground, and that's it. And the yield per ton continues to decrease. So it's basically the same thing, except it's actually real shit. It's not just imaginary zeros and ones. It's real stuff. Half of it is used in jewelry. So half the Bitcoin is not used in jewelry at all. So if you like digital gold, why not just like the real gold? I mean, if you're saying, oh, we got to find a place to be, digital gold, the zeros and ones, why not just buy something with 79 protons? I think gold has 79 protons, right, in the nucleus? Nucleus. Thoughts on potential privatization of Fannie Mae, Freddie Mac? They used to be private. Upcoming Trump administration. Well, it comes down to a simple question: is how big do you want government to be? Right? Do you want it to own private businesses? Do you want it to get into business? This is a big problem in Ontario, where the government, for the longest time, had a monopoly on alcohol distribution. So if you wanted to open up a wine store or a beer store, you couldn't do it. There was a monopoly. It simply eliminated entrepreneurship. You could not do it. They still own in Ontario. They still own the LCBO, the Liquor Control Board of Ontario. They still have a monopoly on it. Do you agree with that? Do you agree on them having a monopoly? You know, how big do you really want it to be? On the one hand, they get the profits from it, but I have to believe it's not run as efficiently as it could be if it were private. And if it were private, they would get the taxation on the revenue. It's the same thing, right? I see no problem. I don't think, unless it's pure market failure, like building a bridge, building a road, building something, unless it's pure market failure, I see no reason why a government need compete in business in anything. In anything. Does a Bitcoin BTC reserve appear on the Fed balance sheet? No. So it's government's banker. Well, they're not quite the government's banker. They're the Treasury's banker, right? But all the assets the government owns do not appear on the Fed's balance sheet. So you'll see no entries for land, no entries for strategic oil reserves, no entries for all the warships and military equipment it owns, no entry for all the satellites it owns, all of the IP it owns, all the roads it owns, bridges. That doesn't show up on any balance sheet. No. I have a share position open on Palantir, sold 1/5 in covered call, 75 strike, expiring January 17th at about 180 BMC. No idea what that is. 3 billion in trailing 12-month revenue. My logical to say, oh yeah, I'm not going to give you any advice on on what you want to do. You know, why do people refer to modified and effective duration as number of years when they are in fact just interest rate sensitivities? That's always sort of, bothered me. It has a duration of 17 years. No, it does not. Duration of 17 means it has a sensitivity to changes in interest rates of 17%. 100 basis point change, we should expect a 17% change. Has nothing to do with years. Now, the duration is related to the time to maturity. The longer the time to maturity, the more sensitive it is in interest rates. But you're right, modified duration and effective duration are sensitivities. They're the first derivative of Macaulay duration. Macaulay duration is a measure of time. That's a given. Whenever you take the first derivative of anything, you get a sensitivity. Modified duration, not the approximate modified, but true modified duration is the first derivative of Macaulay duration. So it is a sensitivity. I would say it would be either bad teaching or just misunderstanding of what they're measuring. What are your thoughts about recent quantum stock developments and viability of a new tech? I think we're a long way from something. There's been a breakthrough in getting something stable, but you could be years away from actually having anything there, years away, and the cost of it. So I don't have any thoughts on it at this point in time. Haven't heard any commentary on agency and ABR in a while. There's not much to say. They've been sort of in a holding pattern. They're interest rate sensitive. If you don't have good news on interest rates, you don't have good news on mortgage REITs or good news on companies that hold debt on their balance sheet as an asset. There's not much to say about that. It's I mean, I'm not negative on them. They're not going away, but I don't see 10 or 15% upside in them over the next 3 months. What are your thoughts about I already talked about that. Let's see, where are we? Maintain conviction on TLT. Oh yes. Is that a means to hedge against markets at these low levels? Not really. I mean, it's part of a blended portfolio you have of beta and duration. So you do have duration, whatever duration happens to be. Would January 2026 90 call be a position you'd open? 1 year out? Probably not. The call will be based on the forward curve, and at 1 year rate, what are we at? 418 on the 1 year. So you'd have a forward curve that is rather steep. So if this is the price here 1 year from now, the 90s, since they're $3 up, they might be 4 times. Yeah, they might be a little in the money at that point based on where the forward rate is. So you'd be paying a rather high premium. And if interest rates do come down, it will send TLT out, but the premium will come out of the call. I don't know that I would do unless you find a way to finance it, right? So if you buy the 90 call, would you sell 85 puts every single month to start working off the cost of the call options? You're going a bit deep end with your psychoanalysis of Trump. I'm not doing much psychoanalysis. I'm just going on the basis that you show me a 20-year-old 8 years later, I'll show you a different person. You show me a 7-year-old 8 years later, I'll show you the exact same person. There's no growing up between 70 and 78. There is no growing up. There's no changing your character or who you are between 70 and 78. You don't find God. You're not converting on the road. You are the exact same person. We just haven't seen him yet, but believe me, he's going to be the exact same person. Now, if he were 25 when he first got elected, now he's 33, I'd say there's a lot of growing up you do in those early years. You don't do a lot. The older you get, the less you grow up. I'd even say 23 to 27 is a significant change in somebody's personality. 13 to 17 is a big change in somebody's personality. 53 to 57, nothing. No, he is who he is. No, I don't think that I've gone too far. Remember who he is, and that's who he is. He hasn't matured, he hasn't softened, he hasn't aged. It's who he is. It's who he is. Any major concern on line electric credit protection for BTB outlook? Yeah, it is. I'm not too concerned because they got a good deal, right? I mean, they got a beautiful building, 176,000 square feet. It's only 2 years old, constructed in 2022. It's only 2 years old. They wanted to be in the industrial space anyways. There is a demand for space. So even if these guys go, I think they'll replace it rather quickly. This is an operational expense. That was a sale and lease back. So it's an operational expense. I looked at the Deloitte claim and the list. I didn't see them listed as outstanding. In one of the clauses, they said there are a number of leases in place. If they're financing leases, well, then, yeah, that's a creditor. This is an operating lease. You can argue that it's a creditor, but I mean, if you don't pay your rent, you're not going to, you can get protection from your creditors, which is what they have, but I don't think that stops you from having to pay your operations. We'll find out. BTB hasn't released any statement on that, but I'm unconcerned. It's one building. It was only 28 million, and it's a great building. I think they'll turn that over at a much better price. So, as far as the climate goes, it's a great climate for a data center because you don't need that much cooling power. You just open the windows in the winter. Just open the windows. That's beautiful, right? Better than being in Texas. Applied video on understanding gaming, DraftKings, Penn, etc. Would be interested in your thoughts on continued legality in gambling and investment outlook. Yeah, I could, I guess, do that. I'm in the process right now of attempting to hire another me, a full-time person who can do this kind of research. I have two lined up. That one is a definite, one is close, very close, on doing recurring modules. So one is in the mining space, junior miners specifically. One is in the crypto space, but not after speaking with the person for a while, they're not a convert. They're not hitting you over the head with their crypto Bible all the time, telling you it's the future. They're knowledgeable and skeptical at the same time, which is what you want with an analyst. So I'm getting close to, having some these modules, but these are outside people, so that they'd be kind of attached to the applied level, but not quite part of the applied level because they'd be doing their own thing. Some industries move so fast that you simply can't keep up with them. Yeah, so I'm more than happy if there's an expert out there who says I'm an expert in that space. My God, I know all the gaming stocks. I'm an expert in that space. We'll talk, right? Canadian apartment REITs falling due to the 40,000 Toronto condos coming to completion in the next couple of years. I don't think so. I don't think so. If you look at the average rent for cap REIT, they're significantly lower than the rents that would be charged on these condos. So these condos, even a small condo, you take a 600 square foot condo, they're still renting 2,500, 2,600 a month, 24 to 27 in that range. So most of these that are coming to market will still hit the market at 24 to 27 range. The average rent, even in Toronto, cap rate apartments is still a good $500, $600, $700 below that. So no, there is a different cost per square foot when you buy a condo building versus buying an apartment building. So an apartment REIT would never consider buying a condo building, that was built specifically just for condos and saying, okay, well, we'll turn that into an apartment building because the construction cost per square foot would simply be too high. So yes, there's a lot that are coming on the market, but I don't think that that's going to affect the apartment REITs. How is a dividend priced into the options with regard to securities with unpredictable future dividends? Usually as a yield. If it's predictable, then when you look at the options chain, you'll see some months where the premium just doesn't seem to make sense. As why is the premium? How come it's not higher on the call? It's because that's usually there's usually a dividend in front of that specific expiration. But if you have an unpredictable, especially monthly, if it's unpredictable, it's usually as a yield. The yield is less variable than the dividend itself because the price tends to adjust for the particular yield. So the yield tends to be more stable. In the end, it is, for some things, it is just an estimate, right? Do you think the rise of quant trading, AI-driven approaches will overshadow the CFA professionals' focus on fundamentals? Overshadow? No. Push over, elbow them over a little bit? Sure, but overshadow? No. Can fundamental investing stay relevant, or will quants dominate the future? Well, just because it's quantitative doesn't mean it doesn't rely on fundamental data. You still have to know what to search for. You're still going to need somebody who can look at a sector and say, what are the fundamental things we're looking for in this sector that would tell us where something is good or something isn't. It's not necessarily all just on technical basis of correlations and overvaluation or undervaluation compared to some historical multiple, but you can have a quantitative fund that is fundamentally driven. So it's not as if it's a replacement. It's a different strategy, but there's plenty of room out there for all sorts of strategies. So no, I don't see it overshadowing. I see it finding a space, pulling up to the table and saying, I'm sitting here. There's nothing you can do about it. But I don't see it saying, okay, fundamentals, get out of here, or we'll kick your ass. I don't see that happening. What unique advantages fundamental analysis? Okay, so I've already answered that. Where are we here? I'm going to run through some really quick here. Any information retention? Can you share any information retention tips? So much data flowing every day. Level 3 studying a full-time job is challenging to retain stuff. Yes, it is. I forget most of what I read. So sometimes I'll read a story in the Wall Street Journal, which is interesting, but it's nothing in anything that I'm doing. But I read it because it's interesting. 10 minutes later, if you say, what did it say? I don't know. I forget. It wasn't important to me. It wasn't relevant at the time. Usually, if you can find a way to make things relevant, you'll retain it. Usually, if you're reading for a solution, you'll retain it. Whereas if you're just reading for information, that's hard to retain unless you're going to work with that information again and again. You forget most of what you read. So if you're just going to read some stuff, you will forget most of it. One way, I guess, to help with retention is to repeat it in your own words, or every time you read something, you write a little note to yourself, maybe 3-4 sentences, just a summary of what it means. You pretend you're sending somebody an email and you're explaining it. That's one way. Time consuming. When I do research on a particular industry, I have Microsoft Word open and I write whatever thought comes to my mind. I write, and I tend to retain things a lot better. For learning, I always find it better to talk out loud, as if you were explaining it to somebody who's, they're not in the room, but you're explaining it to somebody who you pretend is in the room. Try to teach it to another person. That'll uncover your weaknesses. Market update today. What you said, US dollar is already a certainty. From the market update today, if what you said re-USD is already a certainty, well, I don't know exactly what you're referring to that I said, then shouldn't the US already be trading higher? It is trading higher. How much higher do you want it to be? It is trading higher. So I don't know what it is that you're referring to there. If Polyev is viewed by most in the US as the Canadian Millet. Why does it have to be, it's the Canadian Trump, it's the Argentinian Millet, it's this, it's that. Why can't it just be, it's Polyev? I mean, I think the common theme among all these people is it's a refreshing return to common sense, just a refreshing return to common sense. And I watched the interview he did with Jordan Peterson, the first half that's on YouTube. And it's just, this is something you don't see politicians do very often, is just speak honestly and authentically. Everything is scripted, everything is careful, everything is planned out. But this guy he's just an average guy, I think. It's hard not to vote for him. It's not as if somebody, I think, would vote for him out of protest of Trudeau, because that guy can't win. I don't want him going anywhere. I want him to lose. I don't want the Liberals having any kind of shot at Canada again. They've destroyed too much. But it would be hard not to vote for this guy. So I don't know that I would call him the Canadian Trump, the Canadian Millet, the this, the that. It's just why can't you have people return to common sense without it being, oh, he's just like this guy, he's just like that guy. No, this is what common sense feels like, all right? Do you think the inversion of the 2 to 10 now sitting at negative about 33 is a risk to markets? Not really. No. I think what the risk to the markets is just a higher 10-year, not so much the slope, but the levels, I think, are the bigger risk to markets. Relative to previous times, which recessions happened, Fed talks were similar in nature. Should we be cautious? Well, I always think you should be cautious. I always think you should be cautious. I have been cautious for 2 years, and that has not been a winning strategy at all. Not one bit. What are your thoughts on Canadian housing market? Seems a bubble that just keeps going up. Yeah, sometimes you look at the price of some things, especially Vancouver, Toronto, and you think, how are people buying this? I mean, how are they buying this on the salaries that they? I mean, what are they making? Graduates making $300,000-$400,000 a year now. No one's told me this, but every time I look around just at prices, or you hear what things cost. Friends of mine bought a house just up the road. Well, I say just up the road, and I mean it's a long road up, and the number that they put out there is like, oh my God, like I can remember just like 15 years ago, if you would have put that number out, you would have said, holy Jesus, how big is that house? Now it's, well, you know, it's a 3,000 square foot house. Like, oh man. What else would you call it? Right? What else? I mean, if it's not a bubble, is it just that, it has become not so much an operational thing that I live in a house, but that the house is the asset and you live in your asset, and it is going to be priced and valued and traded like an asset, as opposed to, something that serves a purpose, asset first, utility second. You can think of it as, well, why buy Bitcoin at 100,000? Because you think it's going to 1 million. Why buy a $2 million house? Because in 10 years, it'll be 4 million. And you can think about it that way. Eventually pop. Rarely do prices come down. Rarely in housing. So I would say go sideways first before I'd say come down. Yeah. What do you say that interest rates are a single strongest factor that impacts Canadian housing prices? Do you think that there are other factors that play a stronger role? Well, if you have an immigration policy like the Liberals pursued over the last couple of years, where you just jam a whole bunch of people into the country without any consideration of whether or not they're going to have housing, what do you think is going to happen? And then when you put in all of these hurdles you have to jump through to develop a piece of land to be able to build houses on it, it's a 2-year process from the time you get the land to the time you get everything done. And God forbid they find a frog on there. Oh my God, this frog. Well, then that's it. And it's you have to be able to shorten the length of time from buying the land to building the houses. And I think you have to get past this density thing, these policies from municipalities about density, because that just makes it, I think that just lengthens the amount of time required, because you have to put affordable housing in with other houses. It's again, the bigger government gets, the more things are going to cost. Get them out of the way. Any thoughts on comments on Elon's recent interest in Europe? Yeah. Where does this guy find time to run his company? I don't think he actually runs his companies. I don't think he's an operations officer. So you can have a CEO and a COO. The COO runs the show, right? Takes care of everything. And you're really the dreamer. You're sort of the big vision, the guiding vision. Here's where we're going to go. But you don't get bogged down in the details of running the business. You don't necessarily have to be there every single day if you have a good team in place. But yeah, I think his voice is beginning to work against the interests of some of his businesses at this point. I don't see the Trump relationship ending well. At some point, that Trump's relationships never end well. They always end badly. So it's just a matter of, let's go to Polymarket and figure out what his nickname is going to be when Trump is finally through with him. Would you consider beta exposure to markets outside of Canada and U.S.? Outside of Canada and U.S.? Yeah, I think I would, but I just think it's a little too early at this point in time. The U.S. market's expensive for Canadians. If you price the U.S. market in Canadian dollars, it's bloody expensive. But yeah, I think it is worth looking at markets outside of Canada, but where would you go? maybe China, but if you're going to go China, why not go Australia? But maybe China. Even that, I mean, if I think about putting a bet on a winning trade, you can play it's like, horse racing. You can play the favorite, which doesn't pay very well, or you can play the long shot, which really pays off, but it's a long shot for a reason, right? Do you think CFA is important to FP&A? No. I hate to say that, but no. FP&A, I don't really think you're doing any real portfolio management or asset management there. Maybe some do, but I don't think that's the flavor of it, and I don't think you're doing a lot of security analysis there as well. I think if you're doing that and you're placing money, you're probably spending more of your time on manager selection as opposed to security selection. No, I it's in my best interest to tell you, yeah. Well, actually, it's not in my best interest, but it would be consistent with my brand to say, yeah, oh yeah. But I mean, you can't say that to everyone. For this, not really, no. Black-Scholes model still practical for options pricing? Yeah. Oh, yes. Or have advanced models like stochastic volatility and jump diffusion make it obsolete? No. Do you have faith in Pierre? Well, do I have faith in Pierre? I have a belief that he will be better than what Canada currently has right now. Anything would be better than continuing on with this progressive experiment that clearly has shown itself to be a failure. It's being abandoned wholesale across the world. And even when it was going on, did we not all think in our heads, even if you were afraid to say it, of this is fucking ridiculous? Like, this is ridiculous. Finally, it just feels like a breath of fresh air to get back to some common sense. Like, does government really have to tell you how to think, how to feel, what to say, what not to say? Enough. Get out. Let's see. Have you updated your GM thesis after they cut the cruise robotag? I wouldn't touch GM now. Getting out of cruise, I thought not spinning cruise out a couple of years ago when they could have gotten $50 billion for it. In the when the hype was big, I thought that was stupid. And the CEO of Cruise thought so at the same time. And Mary Barra called him and said, "You're fired. I know you wanted to go a different direction, but we can't have you anymore. You're gone. We're going to keep it and, go our own way with this." Why keep putting money into something that clearly looks like it's not going to go very far? I seem to believe that there'll be one or two big players in that space that will probably license their software. So why not license the software, right? But I wouldn't touch GM only because, again, the comment about my analysis of Trump. I'm going to do it again. Mary Barra did not give him money. Mary Barra did not endorse him. The UAW did not endorse him or give him money. Trump has two P's: policy and punishment. I think he's going to select the Detroit automakers and the UAW out for some very special punishment. If he hits Mexico and Canada with tariffs across the board, that's just going to hurt them, and that could cost UAW jobs. And in Trump's mind, good. Now you've learned your lesson. The next time I do something, you praise me. right? You've learned your lesson now. So I think they're in for some punishment, but I don't think I would touch GM now. I've never been a big fan of Ford to begin with. Even when I was investing in GM, I said I wouldn't touch Ford. I'm not interested in Ford at all. But it's just too risky to go into GM at this point. What's your opinion on Pierre? I already gave that. What's your opinion on Diet Coke? In moderation. Lost access to the applied level videos since the new year. Well, that can't be right. You can't have lost access. There is no expiration for it. So you're probably logging in the wrong way. Bear spread with puts on MicroStrategy. I'm probably just going to go short this thing. Are you a Coke or Pepsi guy, or do you get a little freaky with the Dr. Pepper? I don't like Dr. Pepper. I'm Diet or Zero, Coke Zero, Pepsi, Pepsi Zero, Diet Pepsi, Diet Coke. Not very often. Just I like having it around, but not often. Started investing early. Would like to know, is the mastering of analyzing balance sheets almost everything when it comes to investing in stocks? No. If I was only given one statement, it would be the cash flow statement. If I was only given one statement to look at, it would be the cash flow statement. Because cash is king. Cash is everything. The cash flow statement will tell me a lot more. That if I were only given one thing, it would be that. So the cash flow statement is a result of changes in the balance sheet and a result of, well, it starts with net income if you're doing the indirect method. It's a result of changes in the balance sheet. So you could say, well, it's a derivative of the balance sheet that you're looking at anyways. But I think if you're looking for the best information on the company, it would be what cash does it generate? But as far as analysis goes, some balance sheets aren't interesting. The income statement probably is more interesting than balance sheets. For example, Costco's income statement and cash flow statement are interesting. The balance sheet is just a result of what they do. I expect to see inventory. There's inventory. I expect to see some deferred revenue because they sell memberships. There's deferred revenue. I expect to see deferred tax assets and liabilities. I see that. I expect to see cash. I see that. I expect to see property, plant, and equipment. I see that. Right? Balance sheets are more interesting when you have a financial balance sheet, not an operational balance sheet. Operational balance sheets, if you say, well, I'm going to show you I don't know, ABC Toolworks, what would you expect to see? Well, if they're manufacturing inventory broken down into raw materials, work in process, I'd see some cash accounts, accounts receivable. I'd see deferred tax assets, deferred tax liability, some accounts payable, some debt, some equity. I could tell you what I'd expect to see. Probably nothing surprising because they have operational assets. The assets are used to generate revenues and cash flow. If you have financial assets, well, then everything is your balance sheet because your balance sheet will tell me what your revenue will be. If I see that you have property, plant, and equipment, I still don't know what your revenue is going to be. But if I see that you have financial assets like agency, which has mortgage-backed securities, I can look at your balance sheet. I could see your assets. I could see what your debt is, what your leverage is. I can tell what the drivers of your income statement are going to be. The income statement is almost a result of the balance sheet. Whereas with operational companies, the success of the income statement and your cash flow statement will result in your balance sheet. The amount of cash that you can put on your balance sheet, the efficiency of the assets that you use, the turnover in your inventory, etc. So for some companies, the balance sheet is what you would look at. Again, those with financial assets. Where are we? What are thoughts on Canadian oil? Trump pushing Canada first. Trump pushing US first, not Canada first. He's not pushing Canada first, I'll tell you that. Do you think Canadian companies will benefit, or will tariffs hurt them? Kind of hard to put tariffs on energy. However, he's unpredictable. Well, that's the problem. He doesn't seem, I don't think he gets it. I think he thinks it's on brand to be unpredictable and keep people guessing, but markets don't like that. Markets will build in a higher risk premium into the discount rate, and it'll be hard to keep hitting more and more highs in the market. So having some kind of predictability there. Canadian oil companies fell after Trump's tariff comments. Yeah, that would be the natural reaction. And my guess is that he would probably exempt energy for refineries that couldn't use U.S. oil anyways. So there are some refineries on the Gulf Coast that rely on West Canada Select or Mayan crude. They just don't switch over to West Texas like that. So I think that there'd be some carve out for energy. Besides, I really think that his major concern is immigration and drugs. Is he wants to see that each country is picking up the tab for it, because Mexico did not build the wall last time. So he wants to see that each country is going to pick up the tab. If not, then maybe the tariffs are not policy, the tariffs are punishment, and policy is actually the border, immigration, and drugs. You satisfy my policy, you won't have punishment. So he might be leading with the punishment, hoping to get to the policy. As Besson says, escalate to de-escalate, right? Could you do the analysis of some company now? Not really. It takes days to do an analysis of a company, sometimes weeks. Did you sell Micron? No, I got rid of it. Are you bullish DXY? I don't know that I'm bullish DXY. I'm just not bearish right now. Longer term, perhaps, but right now I see no reason to open a short position on the US dollar. That doesn't mean it goes straight up. It'll do this kind of thing, but I just don't see how it's going down at this point in time. What are your analysis going forward after December meeting? I think I've been clear on that in the market outlooks. Friday, ISMG manufacturing prices, housing data show risk of inflation ahead. What's your take on this? Look, there's always inflation, right? The target is 2%. The goal is inflation. The goal of all central banks, it really is inflation. If you don't have inflation, let's say that you don't have deflation. Let's say you just have zero change in prices, always just zero change in prices. That means to have zero change in prices, you have zero change in wages. How else are you going to pay everybody more and more and more every year, but no prices will ever go up? That means you'd have to limit wage hikes to the extent of productivity in all industries. So some industries would do well, some industries would do bad, some industries you'd have to lower the wages every year. So you do want to encourage some level of inflation. I think some level of inflation does do a benefit to the economy by increasing velocity. It does do a benefit to the economy by encouraging investment in real assets as opposed to financial assets, right? So there is nothing is all good or all bad Everything has its advantages and disadvantages. Inflation has economic advantages and it has disadvantages. The idea that inflation devalues the dollar, well, that's the wrong way to look at it. If you want to, if inflation devalued labor, that's a problem. But what does inflation do is it gives labor a raise every year. If you're not beating inflation, you're really not trying that hard. I mean, you've really just given up. If you can't beat inflation, you've really just given up. It's not that hard to do. And we say, well, it's a tax on everybody. Well, okay, then get rid of that and just have a real tax. Either way, you're going to pay for shit, right? So a government owes $10 trillion and it has real GDP of 3%, inflation of 2%. So it has GDP growth of 5%, which means without raising any taxes, tax revenue will grow by 5% a year, but the debt won't grow, right? You see that? The debt won't grow. If you don't have any growth, which means year after year your debt is there and your GDP is not going to grow, and which means your tax revenue is not going to grow. Well, then I got to raise your taxes to be able to pay the debt. I can't just slowly inflate the debt away. Now, if you're a bondholder and you're investing in bonds, you could say, well, my return is going to be less by the amount of inflation. But we live in a world where inflation is encouraged. As a bondholder, you have to expect that. That's the goal. That's the deal. That's what you've signed on to. Don't take that yield if that's not really what you want. I don't understand every now and then you're going to have high levels of inflation. In Western economies, it would be extremely, extremely rare to even approach anything near a third of what would be necessary. Even a tenth, I think, of what would be necessary to call it hyperinflation. Maybe smaller economies that have external debt not denominated in their own currency fall into that trap, but certainly not advanced, not the G7. Whenever you see an inflationary issue, I guarantee you, if you look hard enough, it's going to be a supply problem. It's going to be a supply problem, not a demand problem. Demand problems don't just show up overnight and boom, oh my God, look at all the demand. They don't show up that way. Supply does. Supply can shoot prices up overnight. You get a supply issue, boom, up you go. You shut down the Strait of Hormuz, oil spikes. You're going to get inflation because some supply has been taken off the market. So I don't know that I would pay too much attention to the month-to-month data as opposed to step back and have a look at what's going on in the background. We have for almost 30 years now been living in a deflationary world. If you look at where technology was at the beginning of the 1990s, the typewriter had disappeared and you basically had computers everywhere. The 70s technology was gone. You had computers everywhere. You had higher productivity in what could be done. The internet started, cell phones started, social media began in the 2000s. And look at where we are now. The things that we can get done now is compared to what it was 30 years ago is incredible. And that's not going to slow down. That is not going to slow down. I do think that in a matter of 4 or 5 years, you'll be able to buy some type of robotics that you'd think, well, robotics is the realm of the factory, not the household. Well, I think maybe that might change. You might have some. You do have some robots now. You can buy these vacuum cleaners that you turn on and they just go through the whole house themselves. I can buy a pool cleaner that does that. It'll just clean the pool. I don't actually need to hire anyone. In time, I'll be able to probably buy a lawnmower that I just turn on and go back inside, and the lawnmower will just find its way around and trim everything, and a little thing will come out and do the the weed cutting around the corners, all of these things will continue on. We are moving more and more into a digital, automated, AI-driven robotics world, and this technology won't slow down. A lot of it is not ready for prime time. A lot of it's not ready right now. But if I could transport you back to 1998 and say, here's AOL, and you'd say, well, is this all you do? So far, yeah, so far, that's pretty much all you do. That's it. And there were all sorts of dreams about what you could do, but it took about 20 years to realize most of those dreams. And a lot of it went away. And I think that you have that right now. Let 1,000 flowers bloom. Most of them will go away, but out of that, some big companies will be born. Some big technologies will be born. That is all deflationary because it increases potential GDP. So if you can increase the level of potential GDP, your actual activity doesn't hit up against potential. This is where you start getting inflation, is where your actual GDP hits up against potential, exceeds it. You get these gaps. Those are called inflationary gaps. There's your output gap. There's your inflationary gap. If you raise the potential GDP, where is it? So go back to the mid 80s, head to the record store and get the new Van Halen, the new Van Halen album. There's only so many of them and they're not on sale because there's only so many of them and then you're sold out. Do we sell out of music now? Let's say 1 million people want to download the latest song from whomever. Let's say 2 million, 3 million, 4 million, 5 million, 6 million, 20 million, 100 million, 200 million. Do you run out? Where's the limit? Right? So the more we start living digital lives, where is potential GDP? How high up is it? So you can have more activity without it becoming inflationary. If you see inflation in a particular area today, I would say look to supply first before you look to demand. Look to supply, because there's probably some constraint on the supply of that one thing. All right. Where do we leave off here? What would it take to make the USD weaker? A faster pace of rate cuts? The Trump tariffs actually working against growth in the US and growth in the US actually takes a dump? The rest of the world recovering. You start to see growth in Europe. You start to see growth in China, growth in South America, where they start moving up. Money will flow into there because they're valued much lower. So an alternative to the U.S. would make the U.S. weaker. 1929, what did you think? What did you think possible? 1929. I wasn't around in 1929, man. Come on, look at me. That would make me what, 90? Well, I'd have to be old enough to think that something was possible. Is that what you meant? What did you think was possible? Unless you think I'm a time traveler. And I will tell you this. Don't share it widely. I have half solved the time travel problem. And I know you probably think that I'm talking crazy right now, but I can travel through time, but only in one direction. For now, I can only go forward, and I can only do it a second at a time, but I'm close to figuring it out. But right now, I can travel through time only forward, and unfortunately, only about a second at a time. I just can't go backwards yet. Has the sell-off in FCX peaked your interest yet? It's getting there, right? Copper sitting at $4, but only at $4. I'm not seeing 390, 380, 370. It's hanging in at $4. I would say that unless I see a US dollar weakening, I don't know that I would be too interested in the materials sector. Goldman Sachs has put the materials sector as one of its picks for this year. It picked 5 sectors to overweight. Materials was one of them, and I thought, materials. You know, maybe in the second quarter. I just can't see U.S. weakness in the first quarter, and I don't see China turning it around in the first quarter. Maybe in the second quarter. you kill the EV mandate, you require less copper. However, if you get rid of regulation and you start building a hell of a lot more houses, you use more copper. More data centers, more copper. More crypto mining, more copper. You do need massive build out in the utility space. You're going to push electrons from the source of generation, wherever you generate it, whether it be nuclear, solar, wind. You have to push electrons out. They travel on copper. I don't think it's just the U.S. that's going to be doing that. So copper is as far as a winner on a metal goes. If I had to pick one metal for the next 5-6 years, it would be copper. Hands down, it would be copper. But until the U.S. dollar starts weakening, I don't see the point. Until U.S. exceptionalism sort of starts to show itself as, well, maybe it's not just U.S. exceptionalism. Maybe it's just Western style capitalism that's exceptional. Just not yet. Copper's there, but just not yet. Brief overview of how data centers work, especially data center operators, the ones that buy land and build. Well, it's expensive. It's expensive to do that, not because of what you have to buy. It's the redundancies that you have to put in place. If you're building like a tier 3, tier 4 data center, you're talking about being up 99.9 some percent of the time. Like your downtime is super minimal and you have redundancies and everything. So if you do have to have downtime, you don't even notice it because you can switch over to your backup systems. Redundancy in utilities, so you need electricity coming in from 2 different sources. Redundancy in cooling, redundancy in, the amount of redundancies you have to build in. So you are using probably 1.5 megawatts of electricity for every 1 megawatt you're actually charging for, right? Just in the redundancies that you have to put in place. And bandwidth, lots of redundancies in bandwidth as well. If you want to know how data centers work, just like get Digital Realty, get their 10K and just read through their 10K. Do we have negative ERP currently? No, I don't think so. Well, but then again, the higher the 10-year goes, the without a correction in the market, it's hard to argue we don't. We have very low equity risk premium at this point. Institutional investors are buying BCE of late. Yeah, there has been an upgrade in the sector, the whole sector. Am I missing something here about the lack of safety of the dividend? I think so. I think they're probably thinking, I saw it at 32 last week. I got out at a higher price. Thank God. Took a hit, but I got out. I just saw it as necessary to cut the dividend. How are they going to get by without cutting that dividend? They don't have the cash for it. How are you going to get the debt down and pay that dividend all at the same time and not sell assets? They don't want to sell any of the entertainment assets. It didn't make any sense to me. I don't know how they're going to get it done. But they could be buying for a 5 to 10 year hold, and they don't really care in the short term where it goes. I'm not in a fund. I'm not tracking an index, so I don't have to buy it. I don't have to say, if you're rebalancing and you were underweight, it fell so much, you might say, okay, well, let's rebalance back to equal weight. So it just could be that you're moving from underweight to equal weight because it fell so much in price that you think, what's the point of being underweight this thing now? It had its price drop. Maybe what we should do is we should just equal weight this thing now. That could be the buying just to get back to equal weight. Once bitten, twice shy. Unless I see the dividend cut and a viable plan for debt reduction, I'm not touching it. I'd like to see an activist investor come in that has some strength. I'm not touching it. Third largest network. It's not going away, but I need to see something more at this point. What is your main source for trade ideas? I don't know that I have a main source. Bloomberg, the internet, Barron's, Wall Street Journal. What goes on in here, you put a whole bunch of data in here, you walk around during the course of the day and you stop and you think, hang on a second. Wait a minute now. I think I got something here. And then you do a bit more research. You ask your questions. You look around. You talk to someone. Am I crazy on this? What do you think? And you just, you take it from there. I don't think there's any shortage of source for ideas. When will you return to Costa Rica? I'm thinking late February. How has the move been after a year? It's been okay. House is, well, there were a lot of repairs I had to do to the house initially. It's Airbnb now. It did well this year. Lots of bookings for next year. I'm thinking of having retreats there. Retreats in the sense of before the level 3 exam in February and in August, I can have up to 4 people come down. So I thought, well, what if for the week before, like, leading up to the exam, I had 4 people come down and we just did 6-7 hours a day for 5 days straight, right? Like that last, in-person review session before the exam. Maybe I can use a place for that. It'd be boring doing it here because this is Canada. Outside of Niagara Falls, there's not much going on here. It would be bloody boring as all hell. Although it's got a great gym, nice hot tub, sauna. I mean, it is a nice place to enjoy, but it's not a fun place like Costa Rica is, right? So I thought of doing that, and then I thought of doing sessions where, because I get this a lot, is what does your day look like? It's hard to describe what my day looks like. It's a process I go through, and then sometimes during the day, it's just, I don't know what's going to happen today. We'll see. Maybe nothing will happen, but maybe a whole bunch of shit will happen. I don't know. But it's a lot of thinking about, reviewing your positions. Not every day, but some of them I review and I think, well, do I want to do anything with this one? Do I want to add to it? Is there anything interesting in the options? Oftentimes there aren't, but sometimes there are. It's like, well, this looks interesting or this looks interesting. I thought, well, what if I had, again, 4 people down? That's the maximum I can have because there's only 4 other bedrooms. The bedrooms are hotel room style bedrooms. Like you walk into it, you have a TV, you have your bed, you have a walk-in closet, you have every bathroom has its own bathroom and shower. It's like you're in a hotel room, but there's only 4. 2 are poolside, so when you open the doors, you walk right out onto the pool. 2 are in the upper level. I thought about doing that for a week, but so you'd be responsible for your flight down and back, but there'd be no hotel costs because you're staying on site. There'd be no food costs. Meals would be included. There's a really good cook down there. Uber is the cheapest thing to get around in that city. Uber's dirt cheap to get around. Just a matter of, what do you price that at? I don't know. If you went down for a week, stayed at a hotel, and bought your meals, you'd be spending probably $2,500 anyways. And that includes you coming down with a significant other. Make it a holiday. We can plan trips for all the non-CFA people who aren't studying. We can have them go out to the hot springs for the day, go check out the alligators, maybe go to the volcano, go to the Starbucks plantation, maybe do some zip lining, all sorts of things we could do. But what do you price that at, right? Let's see. Any nuclear company stocks right now? Not really. No. None of that. I don't know if that's where the opportunity is really going to be in the ones that are generating the electricity or generating the power, or the ones that are using it, like the data centers, right? Um, I don't know. No, I haven't looked at any of that stuff. Half the reason, whenever I say I haven't looked at anything, a big part of that reason is because I haven't looked at anything. In other words, I don't understand. I don't understand the economics of it, so I don't do it. It's a general rule I have. If I don't understand something, I don't invest in it. Not until I understand it will I invest in it. And usually, you can always find opportunity somewhere. Let's see. MicroStrategy at 410. Whew. Any suggestions how to get it off with smaller loss? Sell a call. Sell a call. Sell a call. They have pulled out all the stops, right? From their last quarterly earnings, announcing the 21 and 21 in equity, 21 in debt over 3 years. And then they said, no, let's do it all right now. Lots of convertible bond issues, lots of at the market selling. Okay, now we want to do 10 billion share issuance. We want to buy it all. And the price actually dropped. So now, okay, well, let's just do 2 billion in preferred shares. They can't afford, and it's perpetual. They can't afford the dividend on perpetual. They can't afford it. So what's the next thing they're going to announce? I don't know, that they're going to engage in significant lending of Bitcoin at high single digits, because everyone's getting low single digits. They'll get high single digits, and and maybe they have to get the price back up. They can't keep going straight down. They have to get the price back up. Just doesn't seem to want to respond. Now, it did have a good Friday because it did move up quite a bit on Friday. I think $40. It ended at 340. I seem to think 360 to 400, unless they come up with some magic. I seem to think 360 to 400 is where they're going to be. They're down. They're down right now. In case you're wondering, it's 8:21. Starting at 8 p.m. You can trade a bunch of different stocks. You can trade Nvidia. Let's see what else is trading. Verizon's trading. MicroStrategy. You can trade these things. There's not a lot of volume, but you can trade them. Bitcoin's down. I don't know that Bitcoin has much elevation above 100,000 this far out from inauguration. As you get closer, perhaps. I think I got some losers here doing the, I can't believe you found this person. Oh my God, are you talking about this person? I always block these people because they're just scumbags and dirtballs, right? So just give me a second while I delete all of these. I'll just delete the high level one, and that should delete everybody. There you go. I know you guys aren't going to fall for that stuff. I just get insulted, like, go troll, go do your scam shit on something else. Let's see. Ever do a video giving your perspective on the 2008 financial crisis, your opinion on the main cause, and if it were set up to succeed? That's being done to death. What happened in that period of time? I mean, it's been done to death. It wasn't the housing market. I think if it were just the housing market, it would have survived. It was Wall Street. It was packaging this stuff up into MBS and then taking the lower tranches and repackaging it up, saying, well, it's not all going to default, and then keep always squeezing out another A tranche and another A tranche and another A tranche. And this stuff went everywhere. It went everywhere. When that shit blows up, that's what caused the problem, not the house. You could have saved every mortgage with less money than it took to save the financial sector. It's when you infect the financial sector with this shit. And right now, I see convertible bonds backed by the volatility of Bitcoin, or playing the volatility of Bitcoin. That's going on like crazy. When Wall Street gets a hold of a new toy, they just run with it. There's too much money to be made. Not for the shareholders, mind you, but there's too much money to be made for the underwriters and for the company management issuing this stuff. Way too much money to be made. So it's going to continue on until that shit blows up. Not so much crypto blows up. That shit blows up. That shit will take everything down, because that now is financial, not just an asset price that's falling, but you've put this financial security on a bunch of different balance sheets, and it'll be packaged and repackaged and resold and repositioned, and this structured product and this structured product. And the best thing that could happen for the global financial system is for Bitcoin to drop to 20,000 now. But if it goes to 120, 130, 140, 150, 200, more and more and more and more of this stuff will go. It will be those financial securities that are the bubble, not the crypto. It'll be that, and that is like a cancer. That'll take everything down. That will get ugly really fast. And it'll be just like 2008. View on ABR in your recent position videos. What's your view on the stock at current levels? Well, I had a risk reversal on this, a zero cost risk reversal. You can sort of just write that off. I don't think we're getting above 1750 in the next 2 weeks. But contrary to all the short reports, this thing didn't budge. I mean, it took a hit on the short reports, but look at it. It's still standing. It's still standing. It didn't cut its dividend one bit. It's still there. And the shorts finally just gave up and went away. No short reports anymore on this one. You're not going to take this one down. So when its market does recover, I think ABR will do very well, even exceed the last high levels they were at. 20, 25, 30, perhaps they are, I think, undervalued. But until you get a lower 10-year, it's all about the 10-year. You get a 10-year under 4%, they tend to do very well. Why couldn't you buy Bitcoin and short MicroStrategy until they're at equilibrium? You can. Would that not be arbitrage? That would be arbitrage. The more Bitcoin MicroStrategy buys, the less you can call it a stock, the more you must call it an ETF. Call it an actively managed ETF, but it will be like ARK, an ETF, and it should trade at its net asset value. Because it uses leverage, you would think, but it should trade for more than its asset value because it uses leverage. Usually, these things trade at a discount to net asset value because of the risk of leverage, not the addition of leverage, the risk of leverage. Net asset value at this point in time is 100 and call it mid hundreds, 150, 160. It's not going to zero. It will trade off of Bitcoin, but it will trade down to Bitcoin. So even if Bitcoin goes up 20%, there's nothing stopping MicroStrategy from dropping 20% and still being above its net asset value. The more you put Bitcoin on the balance sheet, the less and less and less important everything else becomes, the more it is nothing more than a balance sheet with a financial asset. Now, somebody could say, oh, but Bitcoin can go to $1 million and it could trade to $500. Then just buy Bitcoin. Just buy Bitcoin, right? If it's going to go from 100,000 to $1 million, that's a 10x. MicroStrategy goes from 350 to 500. The thing is, MicroStrategy, you're paying, what is it now? $2.80 for $1 of Bitcoin. So if Bitcoin is going to double and MicroStrategy stays the same, well, Bitcoin could go up 180%. So then you could say, aha, see, now you have the same net asset value. Yeah, but you didn't move. Like it doesn't matter if Bitcoin goes up. If you're going to give me the argument that, well, you're missing the point that Bitcoin can go up, then just buy Bitcoin. So if you have $2.80, you could buy some MicroStrategy stock and have a claim on $1 of Bitcoin. Or you could just go to IBIT and have a claim on $2.80 of Bitcoin. And if it goes up, you get that return. There is the higher probability that MicroStrategy goes down towards its net asset value and not up, unless it pulls out some magic rabbit out of that hat. What could do it? Well, it's got to do something. It's got to do something, and you don't have the best guy running the show in terms of moral center. So I would seem to think that he's willing to say whatever it takes to get that up, whether it's going to happen or not. I'd say the next big announcement you can get out of MicroStrategy would be probably lending their Bitcoin for high single digits. Low single digits won't be enough. It'll be high single digits, and they've identified a key something or other, and they're moving towards that without anything actually being there. Talk the share price up. Now you have another source of revenue. Okay, well, then now you can conceive of the Bitcoin as being somewhat of a financial asset that has some kind of yield to it, in the sense of whether it has a cash yield or whether you get paid in more Bitcoin. Even then, it would be hard to justify, $2.80 for every dollar of Bitcoin. It would be hard to justify that. And that's not even accounting for the debt. That's not even removing the debt first. I don't know what to tell you about 410. What sector of the S&P 500 would you expect to outperform this year? What sector would I expect to outperform this year? That's a tough one. Outperform the S&P 500. If something's going to outperform, it'll be one of the smaller sectors, I think. Utilities probably has a good ability to outperform. Now you're talking about a total return basis, right? Not just a price return, but a total return, because utilities and real estate have a significant income component. Staples, no. Materials, unless you get a significant weakening in the US dollar and a pickup in growth in other parts of the world, I can't see materials doing it. Financials, I'd say probably more in line. IT, yeah, you seem to, you end up just going back to information technology. Communications, maybe, but they've had such good years. Can they do 3 in a row? I don't know. Which positions video do we get with the applied level purchase? I put it out every week. Every Friday, I put out a positions video, and I just talk about what I'm doing, and how I think about it. Any changes I'm making, anything new that I'm looking at. I think I this Friday I mentioned a couple of new things I was looking at, and one that I'm kind of poking around. Probably start a small position in, but I don't know how yet. Do you think buying puts on inverse leveraged ETFs a good way to be long volatility without having too much beta exposure? In inverse, well, so you're leveraging and you don't want too much beta exposure. As soon as you leverage, if you have a 2x ETF, you have 2x the beta. You have 2x of volatility. 3x, you got 3x of everything. No, I would not buy puts on inverse levered ETFs. No, I don't think I would. You'll pay for them. The higher the volatility, the higher the price. Fixed income core plus manager, would you be getting out of the high yield stuff. It had a good year. I would have said it last year and been absolutely wrong. But spreads are so tight. Where do we think they're going to go at this point in time? But if they don't go anywhere, if they just stay where they are, it's a decent enough yield, but I don't know that you're going to get that spread contraction that gives you the price return at this point. You're already buying at fairly low spreads. I probably would be looking somewhere else. I don't know where, but I'm in marriage, but pivoting towards being alone. I don't know if I'm going to be able to help with this. Full emotional control, ability to draw satisfaction solely from within. Have you noticed any drawback in solitude lifestyle? Drawback? Look, everything has its drawbacks. Everything does. There's nothing. You're never going to find one thing that has no drawbacks, ever. Everything does. Everything has some trade-off involved in it. So, are there drawbacks? Sure, there are. Are they enough to motivate me to change? No. I am most comfortable when I'm alone. I'm most content when I'm alone. Most content. That doesn't mean that every now and then I don't mind. I'd like to go out to dinner with somebody and have a nice conversation. I'd like that without it having to mean that I got to do it every Friday or every Saturday and then make room during the week. And this is, the obligation of it all. That's something that I don't want. And no, I haven't had a problem with it at all. Can you elaborate on Tesla with no more EV credits, tariffs probable on China, and global trade slowing down? Do you expect selling puts on Tesla to complete your positions? Selling puts? I wouldn't sell a put on Tesla because I don't want to own it at all. Tesla is. Everyone knows this about Tesla. Everyone knows it's a shrinking car company with shrinking margins. Other than the perma bulls. I don't know that anyone really thinks that the valuation makes any sense at all, right? Google already has Waymo and you have Uber. You put Google and Uber together and Tesla's worth more. I mean, what do you say to that when they're already there? They're already there and more, right? As far as AI goes, my understanding is Google is way ahead of the game on that one, like way ahead. So, obviously there's something else going on. It cannot just be on the basis of the fundamentals of the company, right? It's don't bet against Musk. Well, being short Tesla is not a bet against Musk. It's a bet against the valuation. It's not like you're shorting the guy saying he's never going to get any of this done. Maybe he will, but it will not be worth this much money. Even if he gets it done, it will not be worth it. You're just short the valuation, but try shorting that freaking thing, right? I mean, it's got a cult following, and analysts who, no matter what happens, it's bullish. Oh, it's bullish. It's bullish as bullish. Kathy Woods and Dan Ives, I think, compare notes before they talk because, they're just nothing deters them. Nothing deters them. That's incredible. Let's see. Is there a reason not to expect a significant correction S&P this year? No reason not to expect it. But again, what's the reason to expect it? Overvaluation, a market that's a little bit tired, way too much weight in the top 10 in the index. Like the concentration is ridiculous on almost all valuation metrics. It's at multi-year, multi-decade highs. It would seem logical to say, what, the 10% here? We're not asking for much, 10%, but this thing drops 3-4%, and it's just buy is the scream that just goes out. There's your pullback. Not too exciting. And then you get these V-shaped recoveries, and you're right back to where you were within a couple of weeks. 23 times forward earnings. Everyone's saying, oh, we're massively overvalued and due for a correction. But okay, if we're due for a correction, then at least pull your bids. Pull your bids. If you think it's going to go down 10%, when you see it drop 3%, don't go rushing in and putting a bid in. Pull your bids. But no. So everyone thinks it should drop 10%, but no one's willing to let it drop 10%. So there you go. Miss a scheduled date, location, CFA level 3 exam for February, even though I paid the complete registration fee. Someone in my situation able to still do. I think that's it. But then again, I'm not CFA. Yellen increased T-bill issuance more than historical levels, greater than 40% of total. Best intends to bring it back to 15% and issue more notes and bonds. Wouldn't it push yields or offset? All this would do is encourage the Fed to stop balance sheet runoff sooner. And it would be the incremental buyer at that point of whatever has to be issued. If they stop running off that last 15 billion, you got 180 billion in buying over the course of the year. You got 2 trillion in MBS that has to run off. If they're going to sell 2 trillion at a low valuation to buy treasuries at a low valuation, why not, right? Sell one cheap thing to buy another cheap thing. They could easily sell $500 million over the next year. They can absorb it. If that's what he wants to do, the Fed will absorb it. I don't see it being that much of an issue. It would make the repo market a lot more liquid and a lot more necessary, because there wouldn't be you wouldn't have enough money market securities out there. There's lots of money market securities now. You wouldn't have as many money market securities, so you'd be using 30-day repos to turn a 5-year into a 30-day security. Right, so it would probably increase activity in the money market, in the repo market. Is it worth looking into tips, ranks, analyst estimates? Yeah, I seem to think so. Although I would say that most of those are self-serving, right? So I'd take it with a grain of salt. Keep in mind that even when the .com was imploding, most of those stocks still had a buy rating on them, right? Most of them still had a buy rating on them. Even in the bear market, when stocks are going down, very few stocks have a sell rating overall. So take it with a grain of salt, right? Most of those are linear projections forward. What is happening with Trudeau? I saw polls that the Liberals may only get 6 seats, less than you need for an official party, from what I read. Yep. Will NDP or Bloc Québécois pull candidates? Yeah, I think not NDP, Bloc Québécois in Quebec, Conservatives pretty much everywhere, I think. But you have Mark Carney, who's on the phone right now to Liberal MPs, garnering support. You have a louder and louder cohort telling Trudeau, get the fuck out, because we can't win with you. We know we can't win. We are going to lose. And you have this guy that just is freaking tone deaf, not going anywhere. Oh, I'll reflect. Reflect. Nobody likes you. Time to leave. It's time to leave, right? Just go. But I personally don't want him to go anywhere, because I want him to lose badly. Oh, I want them to lose so badly. If he goes and Mark Carney comes in, he might have the cachet to save the party. and you might run the risk of having another liberal minority with an NDP propping them up again, in which case there's no hope. There'd be no hope for Canada at that point. So you have to just get them out at this point. All of them have to go. All of them. Carney is a greenie, right? You are interested in the Canadian oil and gas sector. He's going to be. It's going to be expensive for Alberta. It's going to be. Yeah. It's just there is no choice. They've got to go. With the rollout of 5G, do you see telecom companies as growth stocks, or are they still primarily income-oriented investments? Well, here's the thing that I don't understand why Bell can't do. Look at what AT&T has done. AT&T has got a great partnership with BlackRock, who a joint venture to lay fiber, which reduces the capital cost for AT&T greatly, and they become a customer to their own joint venture. What a beautiful thing to do. Now you have the network, you have 5G, you have everything. Why are you not in data centers? Like, why are you not in data centers? Why are you not in data storage? Like, I mean, why are you not there? Those are the growth areas. Why are you selling to the growth customers? You have big centers with all your switches in there, with all of your infrastructure in there, and you're not ruling the data center space. You are the network, for God's sake. I mean, I don't know. Maybe I just don't understand telecom and data center, and why can't they just be the data centers themselves? That would be the growth space. I don't know that there's much growth space in the network when you have 99% coverage in the US. Maybe fiber, you could argue, is a growth space. But 5G doesn't work very well yet. 5G needs line of sight. 5G has problems with leaves, with rain, with fog. So 5G is still a bit of an issue. 5G works great in very crowded places like downtown areas or arenas or concert halls. 5G works fantastic because once you get into millimeter wave technology, they don't propagate very far. So you need the I don't know what they're called, repeaters or whatever, but you need them tighter and tighter and tighter together. Cell towers, the cell towers that you need more of them and a higher density of them and closer together. So you're not going to get them down the highway unless you put it on every light post, put something on every light post. So it's more for crowded areas where you're going to get that kind of stuff for now. Doesn't mean that that'll be the case, but the shorter you make the wave, the less it propagates. Any position in Carvana? No. Can you please tell me why my Q&A, my questions didn't show up? I asked you by email and you answered me. Thank you. But tell me based on what, I think, did you put a link? Anytime you put a link into something, it goes into a holding where I have to approve of it. And I rarely check on that thing where I've got to approve of certain comments. Did you call me nasty names like swear? If you swear, then it goes into a holding thing and I have to approve it. And I rarely go into those things. So that could be the case. Looking at demand for major contributors to US GDP, new home sales, auto sales, it appears that we have been in a 3-year demand drought. I'm gonna take your word for that based on what you're seeing. I don't know that I would agree with that, but do you believe price hikes continue to offset lack of demand such that aggregate corporate earnings stay afloat? I don't know about car demand from 14 million to almost 16 million over the last 3 years. I wouldn't say that that's a drought. Pre-pandemic, you got as high as 17 million. 16 million is still pretty good. Is it possible we get earnings compression and multiple compression at the same time in the near future? Everything is possible. Or should I say probable? Yeah, but I don't know that I'd be holding out for that. I don't see any clear path to that happening. Very rare do markets die because of old age. Very rare. Very rare that corporate profits just fall off a cliff for no reason, especially when you've had interest rates come down for any floating rate debt. I do think that costs and rates will continue to come down with regulations thinning out or disappearing. I also see that as a tailwind with lower taxes, or at least the continuation of the lower tax rates. I see that as a tailwind. It's hard to make the case that you're going to have an earnings drop off. It's hard to make that case. For that to happen, there has to be a shock to the economy such that earnings are going to take a big hit. So there's lots of job cuts very quickly. If it's a slow moving train, I can see it happening. I'm going to right size my expenses. I'm going to right size my staff. I'm going to cut things out. I'm going to pull back on some CapEx. Just not enough to be a shock to my investors, but enough that I can maintain my bottom line. So if this is just a slow moving slowdown, you're not going to see it in earnings, not without some external shock. So I don't know that I would be sitting around waiting for that to happen. Is there any global world leader that you think is a good leader and that you enjoy? Yeah, probably better to ask me if there's any business leader or any financial leader. I don't really pay too much attention to politicians. They're necessary evils. I think we, as citizens and as businesses, do fairly good despite government, not because of government, but despite what they do. They don't do too much damage. So it's a matter of your politicians can either do a little damage or a lot of damage. Trudeau has done a lot of damage. So I don't know that I would say that there is some leader. If I had to go back in time, I'd say, Reagan, Thatcher. Probably. I'm going to scroll all the way to the bottom and then we're going to move up. Any suggestions on what sections to start off with for level 3? You have a choice. You can start with easy sections or hard sections. I think get the hard sections out of the way. The easy sections are easy for a reason. You can get through them quickly, right? Hard sections, you want a little bit more time to reflect on it. I think starting with fixed income makes a lot of sense. Considered the more challenging, has a higher weight, 4 readings. The first 2 are about, there's your brain. As your brain gets older, it withholds certain words just to embarrass you publicly, and then it releases them. Immunization. There it is. I broke the hostage out without having to negotiate. Immunization. 1 reading is on yield curve strategies and another is on credit strategies. All of them kind of challenging. I'd start there. What do you think of Analyst at its current state? I don't see 10 or 15% of the upside, but I see a stock with a good dividend yield that probably isn't going way down and isn't going way up. That's what I see right now. I'm trying to get my wife to invest some of her capital into the markets, but she's skeptical. How do I convince her? You don't. You don't. You lose 1 penny of that. That memory is long. Remember that time. Remember when? No, that memory's long. You don't. She's skeptical. That's it. Just let it go. Getting your wife to do something she doesn't want to do is like borrowing money from an ex-girlfriend. That shit never works out well. It never works out. Are you going to be doing any CFA level 1 videos? No. I'm out of level 1 now. Well, I shouldn't say I'm out of level 1. My voice is still in the level 1 videos, but any new incremental things now, I've handed it off to a new cohort of instructors that, based on all the feedback I've heard, are pretty good. So I don't listen to any of the videos. I've sort of pulled away from CFA quite a bit at level 1 and level 2. You do something for a long enough period of time, at some point you say, yeah, you know what, I've made my mark. Made my mark. I'll write that down. Kathy Wood and Dan Ives are goofballs. Let it all fall. Good buying opportunities, like the end of 08. Yeah. Is there a story behind? My wife said Google and Uber together make Goober. Okay, that's pretty funny. Goober. Yeah. Not trying to shill. I just really like your counterpoint, but I don't know if what I said is actually an argument. No, I guess I shouldn't have scrolled all the way to the bottom, because now I'm reading conclusions of statements that were made earlier, right? Some of your favorite books on philosophy. I don't know that I would say favorite books as much as favorite writers or favorite genres, but let's see if we have any market questions here. Any thoughts on buying companies such as Open Door that buy and sell homes? I don't know anything about Open Door, so I'm not going to comment on that. What made you go really into REITs? The returns from 2009, 2010 to 2019, REITs beat the S&P 500. Coming out of the dot-com crash all the way into 2004, 2005, REITs beat everything. And I think in Canada, the Canadian apartment REITs, as rates keep coming down, and we see quarter after quarter that the REITs are still killing it. I think Canadian apartment REITs have a good opportunity of outperforming this year. Oh, it's Golden Globes tonight. Did you know that? The Golden Globes I'm competing with the Golden Globes here. So I'll let you go here shortly. We'll wrap it up soon if you want to go watch the Golden Globes. Do the Roomba lawnmowers make a nice cross patterns or crazy like the carpet Roomba? I don't know if there is a lawnmower Roomba. I'm just thinking it wouldn't be long before that happens, right? There are Roomba lawnmowers. Our neighbor has one. Oh, really? It has its own doghouse. There are Roomba lawn. Look at that. I made that up. I just said it off the top of my head. There are Roomba lawnmowers. I'm gonna have to look into that. Would you ever want an analyst to join your team? Want to start a hedge fund? There's no money in that anymore. The big money is gone. As a startup hedge fund, you're going to struggle to get 1% on your management fees. $100 million fund, that's $1 million. You know, after you pay your legal, your platform fees, you're losing money your first year, guaranteed. 20%, that's going to be tough to get as well. Until you get a track record, you'll be getting 10%, hurdle rate of 8%. You're really not making money till you're $500 million or higher, and then you're doing okay for a small office. The big money in that space, the 2 and 20s, those are reserved for the top 5%, 1% of funds. Most are 70 points, 80 points on management fees. It's the big money is gone on that. I don't know that I would want to start a fund. I just don't see why I would want to work that hard, take that much risk with other people's money, because it's reputational risk as well, right? And you have to be fully invested. You don't have the opportunity to sit back and wait. You got to be fully invested, and you got to be you got to be playing more than likely you're using leverage to get most of that stuff done. You're not just a long only at that point. Just doesn't turn me on at all. I don't know why. It just doesn't turn me on. Hopefully Resorts will be open to applied members, not to, applied members. That's what I meant by having, 1 week where it would just be, okay, let's do some trade setups here. Let's look at the market. Let's see how we would do certain things. I think the funnest weeks would be the Fed weeks, but you don't get to pick and choose when the Fed weeks happen, right? Whereas, you can pick and choose when you have a week in Costa Rica because you can time it with vacations. Kind of makes it nice. Well, getting good feedback on attending in Costa Rica. I just don't. Again, I don't have a price for you, so I mean, I wouldn't even know how to price it. And for level 3, doing that kind of thing, I don't even know if I still have a relationship with Serify on this. I don't even know if I'd even be allowed to do something like that. I'd have to pass them first. Had a video applied level about delta hedging, delta neutral, and take a deep dive into delta strategies. I did. There's that's up there. That is up there. In portfolio construction, I show you how to create a delta neutral, a market neutral portfolio. How to size your positions to be market neutral. In applied options, I do show you how to delta hedge something if you're going to gamma trade. And in the positions video with MicroStrategy and the Bitcoin miners, I show you how to gamma trade without having to delta hedge by being directional. But that you're just benchmarking to a delta to some option somewhere regardless, and you don't have to draw lines on charts anymore. You just have to watch one indicator and it tells you when to buy and sell. I've done quite a bit of that. 10-year at 4.65, time to start moving into duration like equity securities. Yeah, I think I don't know about the U.S. REIT space. I'm cautious on the U.S. REIT space. Utilities, the U.S. utility space, I like. I think I would prefer not the fully regulated, but mostly regulated utilities as opposed to fully regulated. What is your goal with this channel? I don't know. I don't know that I have a goal, and maybe I should. Maybe I should have some sort of goal that I work towards. I don't know what my goal would be. You got to understand in on YouTube, in finance, it's a crowded space. Everybody and their sister has something going on in this space. There are podcasts galore, like not dozens, not hundreds, thousands of podcasts out there in finance. It's probably the most crowded space out there. And as far as finance goes, I don't know that I'm one of the bigger ones in terms of viewership. I seem to think that there is a role in just education, in answering questions that educate as opposed to draw lines on charts, buy this, buy that, do this, do that. I seem to think what I do with the midweek Q&A bring some of that into it. I think there's space there, but it's never going to be as big as entertainment. So you can educate or you can entertain. Entertainment will always have audiences at least 10 times bigger than education, always, hands down. I don't know that I want to do that, but I am willing to listen to ideas. If somebody says, I have an idea, why don't you do this? If I see that there's value for the person watching, and not just value for me, but value for the person watching, then sure. I think the channel has been better since I've stopped the ads. I took it off monetization like a year and a half ago. I think it's a better experience without having all the ads show up. So whatever I do with this is, since I'm not motivated by monetization, since I'm not motivated by the ads, I don't feel the need to keep putting video out after video after video, trying to get more views to generate more revenue, because none of this makes any money. It's just me spending my time. Let's do a big scroll here, see where we get to. Why do you think gold has 10 to 15% upside? I think 3,000 is probably in the cards. You're at 2,600 now. 10% puts it at 2,680. Another 5% puts it over 3,000, 10, 15% up over the course of the year. If you're using futures, what is it? 8,500 on a futures contract, 100 ounces of gold. It's almost 30 to 1 leverage, right? And then you just roll. You'd have to roll 4 times a year, but I seem to think right now that would be an interesting place to be. Every $1 is $100 up or down. So if it drops $100, you're down 10 grand, or you're up 10 grand on an investment of 8,500 for your margin, right? So even though it has 10% upside, if you think, well, if it has $200 upside, or if you think there's 3,000 by the end of the year and we're at 2,650, and you think there's 350 to the upside, that's 35,000 to the upside on every contract for an $8,500 investment. That's, what is that, 400% return, right? Using leverage. I think I would play it with leverage. If I hear you right, the argument is that computation will abstract away most activities of daily life. Well, we have to define what you mean when you say most activities of daily life. If you're talking about mundane activities, like cleaning your house, yeah, I think so. If you're thinking, about your property, your lawn, things like that, yeah, I think so. If you're talking about, stuff that your brain does, I don't think so. Well, I believe the same could happen. Executing those tasks provide essential elements of the human condition. Does it? Does it though? Does taking a bucket and going down to the river to get your water enhance the human condition? Because 300 years ago, you did that. And if I visited you 300 years ago, I said, in time, there'll be a pipe that brings this right to your house. You won't have to come down here and do your laundry in the river and bring a bucket down here to get water. Would you say, but that would take away from the human condition? In time, you won't have to go kill your food in the forest. You could just go to a supermarket and everything in the world will be right there. In fact, you can have it delivered to your house. Would you say, well, but that would take away from the human condition? I wouldn't say the human condition has changed over time. The context in which we find our condition has changed over time. But the human condition, if we think of humans as social animals, we still have the human condition. What is probably killing the human condition more than robotics and automation is social media. As much as we think that that's connecting us, I think it's dividing us more than it ever has. It's isolating us more than we ever have. There, I think we lose the human condition. There, I think we do when you decide that your brain should live online. But as far as robotics taking over everyday tasks, I don't know how doing the dishes adds to my human condition. No, I guess, it's a good debate to have, is how far does technology go before it changes the human condition. The counter argument to that is the human condition not different every couple of centuries? Would you define the human condition differently 2,000 years ago as you define it today? Right? What if you were alive 2,000 years ago, how would you define the human condition? Right? If you were in France in 1770 and you were not part of the nobility, what would the human condition be? How would you define that? And would you say a loss of it would be bad? Right? Because you had the peasantry and you had the 1%. I mean, that was, as far as wealth disparity goes, that was probably the biggest and the most obvious one you could point to. So the human condition, when? Right? I think one of the constants of the human condition is the adaptability to change. I think we as humans would die in a static environment that had no change, that was perfectly predictable. One of the reasons why prisons are such terrible places to be is because of the monotony of everyday life, because of the lack of freedom, the lack of novelty. I think that probably stifles the human condition more than change. I think you need change all the time. You need unpredictability. You need uncertainty. I think that's part of the human condition. Imagine if you knew everything for certain that was ever going to happen. Well, that I think is robbing you of the human condition. That if that did exist at some point in time, if it did exist on some planet somewhere, that some species had omnipotent knowledge of absolutely everything, they would have eventually killed themselves out of just sheer depression. Because what's new? What's novel? Nothing. You play a game, you already know you're going to win. You already know what tomorrow is going to be. You already know who you're going to meet. You already know how it's going to end. You already know how everything is going to work out. You already know everything. What's the point of going on? What's the point? I think the human condition flourishes in uncertainty and change. Those, to us, I believe, are constants that we need. I don't know if I would say that the operational things we do add to the human condition. I would say that things we do add to the human condition, and what those things are don't really matter. Whether it was walking 3 miles to the river to get water, whether it was digging a new hole to poop in, because these holes do fill up over time. You got to build a new hole to poop in. Whether it was doing that or whatever the case was, there was, I think, at the heart of all of that, some social aspect, whether it was the social aspect of the family, the community, the farm, the society that you're in. Technology allows us to expand our social vista, but it also gives us the opportunity to constrict it greatly, hang out in the basement and just, chat on a keyboard without ever actually interacting with human beings. My opinion, there's a critical limit where society probably goes mad before everything becomes fully automated. See, I don't think so. I think as long as you have change and uncertainty in your life, you will never go mad. It's when everything becomes perfectly predictable, I think, is when you go mad. I don't know. Tell me what you think of that. Familiar with Evolution Gaming, online casino software provider, and no, don't know anything about that. Comment on Berkshire holding $330 billion in cash. Well, I have to believe that they're doing it for some reason, that it's not just, God, we don't know what to do, we don't know what to buy, but that there is some reason they're hanging on to that much cash. Either it is for acquisitions, or it's just a great return. being in cash right now just provides, especially with that much cash, just provides such a great return. I mean, just your annual return can buy a large cap company every year just on the government's interest. Can buy a large cap company every year, right? 4%, 4.5% on 330 billion. What is that? 4, 9, 13 and a half, 15 billion. You can buy a $15 billion company every year on the government's dime. Either that or they're very concerned that at some point there's going to be a downturn, and why be fully invested? At some point there'll be a downturn. I don't know. It didn't work out well for 2024. Instead of holding cash, if they had held the S&P, it would have been 27% return. If they put it all in CCC bonds, it would have been 17% return. So maybe not so well. Have you captured bull run in tech Nvidia recently? No, I don't think I've ever owned Nvidia. Could you explain why does the Fed target 2% inflation? I can understand growing the money supply at the rate of economic growth, but why a 2% rise in general prices? Because inflation is bad. And there is a belief that the margin of error on the measurement of price is about 1%. So if you target 1%, you're actually targeting 0%. So why not target 2%? You want to keep it low and stable, right? Not too high, low. 1% is too close to 0, and you'd be acting too quickly. 2% is good enough because if it falls down to 1%, you don't have to jump in, right? And it can go back to 2, maybe to 3, back down to 2. It's a nice little attractor point to try to target without having to do too much work. 1, you'd have to do some work because you don't want deflation. Once that takes a hold of, it's just as hard to break as inflation is to break. So 2 seems to be a good target to aim for. Thoughts on Carvana Hindenburg report about them? No thoughts on it. I'm not in it, so I don't have to pay attention to it. What has been the trade you have been most confident in? How large was it of your portfolio? I guess it would have been in July, August. I was cap REIT. I had 64,000 shares along with puts. And it went from 42, 43 all the way to 56 in a period of, I think it took 3 months to get there. So that was a nice run, but I had good confidence in that one. What's the best way to learn IBKR software for trading options? YouTube. They have a YouTube channel, and there are other people on YouTube who will use IBKR. Just go to YouTube, type in IBKR trading options, and just follow along. Might be a good time to consider FRO and Starbuck for potential investments. Not at all. You have a record number of ships being delivered this year. A record number of ships. And if you're going to have tariffs and then counter tariffs, you will reduce the amount of trade, not increase the amount of trade. You'll reduce it. The Panama Canal, I think, is almost back to fully functional now. They're using diverting water from a lake so that they're back to 36 ships a day. So that really only decreased or increased the supply by 5%, or increased the demand for ton miles by 5%. So that's reduced now. But if you have tariffs, you're going to have less stuff traveling across the water, and a record number of ships being delivered this year. So a lot of supply coming online. I don't know that I would be going into any of them. Need more long vids like the Ice Age one. That takes a long time to do. That one took 2 months. And the amount of people I had to talk to get all the perspectives on that, and the amount of rabbit holes you have to go down, those take a long time to do. They take a very long, and any more that I would do like that would go into the applied level. Do you believe idiosyncratic risk is compensated in private markets? Well, I'm going to go ahead and say yes, because wouldn't it all be idiosyncratic risk? So, for instance, I built a business, a CFA business. I hired people. We had 2 locations. We had staff in 2 locations, admin in one place, IT in another place. Eventually sold it to a private equity or a company funded by private equity. It's still part of the private equity fund. The value of my business did not change as the market changed. We didn't have a ticker on the wall saying, "Oh shit, we're down 3 points, we're up 4 points, we're down." It was all idiosyncratic risk. It was 100% idiosyncratic risk. Best investment ever. Didn't put a penny of my money in there, just all my time. And man, did I sacrifice, but just time, all time. And then the cash flow built everything else, but it was just a sheer amount of time. And it was all idiosyncratic risk. So I believe in private markets, you're probably betting more on idiosyncratic risk than you are betting on market risk. Any gamma trading opportunities you are eyeing? Yeah, if you have the applied level for positions, the positions video, you know that I am doing that on a number of companies. Once you made a good amount of money, what do you like to spend it on? Exotic animals, I guess. I have been known to keep an exotic pet around the house. I don't know where he is, but I do have one around. They're dangerous to live with, though, because any minute they can attack you. No, just kidding. What do I spend it on? I'm not a collector. I don't collect things. I don't know what I spend it on. There's nothing that drives me to say I want another one of these, or I got to go buy another watch, or I need this, or I don't know. Not much. Would you happen to have any thoughts on Palantir and the reason for its recent high valuation? Well, if you think that geopolitical tensions and geopolitical risk is going to increase into the future, they're probably best situated for that sort of thing. And keep in mind, when you're looking at Palantir, don't look at their EPS. That'll tell you nothing. Look at their growth rate and add it to their free cash flow yield. And if you get over 40, the higher you are over 40, the more fairly valued they are. What do you think? Oh, the IBKR changes to leverage. If you are an IBKR subscriber and you have any position on MicroStrategy, which I do, you got that email. They are changing their margin requirements on MicroStrategy because of the volatility. This is quite common. They've done this before in the past to different stocks. They do change the margin requirements because they have to protect everybody else on the system. They can't let one single person take the company down. They owe an obligation to everyone. So I don't blame them. I have no problem. I have no problem with the margin requirement. What else we got? In your video on your retail approach, you said that you seek alpha in a REIT space. But as I understand, you make bets outside of it also, like in being GM. How do you decide? Well, when I did it, I was coming out of 12 years of primarily just being in the REIT space because it was just easy to make money. in the REIT space. Things just went up. It was fantastic. I've since moved out of just REITs quite a bit, but you still go back to what you still have your list of stocks that you watch, that you eyeball, that you say, these look good. So it's not as if I knew a couple of years ago that REITs really weren't going to be the next big thing for the like going out 10 years, that you're going to have to move out of it. When will we get to know how much you did sell for Serify? If you ever have a deal with this type of deal, you sign a non-disclosure agreement. So unless it's me and you in a room and you're not wired or have any kind of recording device, I doubt I will ever say it out loud. NDA. I don't know. I really don't. They're done their acquisitions, I think. They're done the acquisition, so I don't really think it would affect anything. However, there's a document that says something with my signature on it. End of story. More than zero. Let's just say I sold it for more than zero, right? Let's see. Canadian news outlets reporting that Trudeau is expected to announce resignation as early as tomorrow. God damn it. I really didn't want him going anywhere. How come I'm not getting anything on my newsfeed then? That's big enough that I would get something on my newsfeed. Let's have a look here. Trudeau expected, there it is, Globe and Mail, 26 minutes ago. Trudeau expected to announce resignation before National Caucus meeting Wednesday. God damn it, punk. I wanted him to lose. It's going to be probably Mark Carney is probably best situated. Chrystia Freeland's going to try to make a run at it as well. Who else? I don't know. You're walking into not just a burning house, but a destroyed house, like just a destroyed house. I don't know that Chrystia Freeland is just a continuation of the same thing. It's probably Mark Carney's. What a disappointment. What a bloody disappointment. I really wanted him to lose. Oh, well. He is gone, I guess, is one good thing. How's the Canadian dollar doing? We should look at that. Let's see if that is having any effect on the Canadian dollar. Let's see. Canadian dollar. Oh, yes, it did have an effect on the Canadian dollar. Stronger, below $1.44 now, 143.96. I don't know that stays. Bitcoin is up. Futures are red. This is troubling, isn't it? Like the futures, but then again, you can't tell much from the night before. You just really can't tell much anymore. But that they're red. MicroStrategy up $7. So who had the 410? Somebody out there had the 410. You're now 346. So you're only $64 down. I seem to think they're going to be okay one last time because there's anticipation of what Trump might say. And I don't think the press releases from them are going to stop. But I think if you have an opportunity to hedge out, that's what I would do. Okay, where are we here? Canadians, LOL. Yeah, well, Americans, LOL. Well, actually, white Candace Owens. Well, that tells me that you're probably American. So Americans, LOL. Is GMAT preparation if a better move than FRM? These aren't even in the same category here. FRM is an advanced financial designation. GMAT is a graduate school entrance exam. I I guess I'm confused, Roy, and on what you're asking. It's like saying, should I do the MCATs or the CFA? Well, it's so different. Short MicroStrategy getting murdered. You can't win every day, Mike Candace Owens. You really got to find another name. At what point should you consider deferring your exam date for level 2? Studying is not going as fast as I would like. Well, the next level 2 is May. It's only January. I wouldn't stop now, but I guess your question is at what point? Well, if it's clear to you that given your schedule, given your priorities, giving everything that you need to do, there just is no time to get this done, then I don't know that deferring is going to help much as reevaluating what it is that you're doing. But it's only January. I would seem to think that if you think, well, maybe I should defer, is maybe I need to put in more time now. Deferring isn't going to do anything than give you a sense of more time. And then you will get to the same point again, saying, at what point should I defer? You're either going to do it or you're not. Who said that? Do or not do. There is no try. Do or not do. Yoda. Yeah, do or not do. There is no try, right? I keep hearing that quant-based hedge funds like Citadel are outperforming more traditional hedge funds. What are your thoughts on this? Well, Citadel buys order flow from Robinhood, so they're almost set up to make money, right? They front run everybody from Robinhood. If you're getting something for free, you're the product. Just keep that in mind. You're the product, right? Legendary traders, investors trades is one that stands out to you. Legendary investors. I like Cliff Asness. I like that guy. Regarding the dude taking the test, ask yourself if you're studying. Oh, there it is. Okay, that's for somebody else. I'm an Albertian. You're saying I'm an Albertian. IAN, Albertian. That's new. And my wife is a year away from nurse practitioning. It's no brainer to leave this country, given I'm already at marginal tax bracket of 45. You're 45 because you're in Alberta. And then you come to Ontario, you can add another 8% onto that. Yes, 8%. Advice on order of applied level. There is no order. I get asked this a lot. It wasn't designed to have any particular order. Bounce around. Just wherever you start at the beginning. I think the sector studies are probably the easiest place to start because you just pick a sector you're interested in. You can go over to portfolio construction. If it starts talking about options too much, you could jump over to the applied options. There is no order. Much like the world, there's no order to the world. You just jump in and whichever way the current goes. But it wasn't designed to have any particular order. Maybe what I should do is just have an order flow that people can use just to stop the question from saying where should I start? There is no order. Let's see. Haven't found any benefits from the CFA this far. Finding a position in Canadian finance is terrible. Hard to know how to answer that. It's I'm sure that you've learned some things from CFA you didn't know before. I'm sure, and maybe you can't see it, but when they're sorting resumes into piles, that at least for the first cut, maybe you get shifted past the first cut. You make it past the first, but then maybe lose it somewhere else. So it's hard to exactly know, what's going on when you say not finding a position in Canadian finance. So many questions. What kind of position are you looking for? What does your cover letter look like? What does your resume look like? What kind of experience have you got? Who are your references? What kind of references do you have? There's so much more than just letters on your resume, right? Is making a living day trading really possible? Day trading? No. At what point in the journey would you ask if it's okay quitting the day job? Get day trading out of your mind. It would be like saying, can I make it in the construction world as a hammerer? Well, a hammer is a tool. That's all you do is you hammer things. Well, not really. You're not well-rounded enough. Day trading is just a tool. It's not a strategy. Day trading requires a lot of luck, because every single day you have to be on the winning side of something every day, and you can't hold on to losses for too long, because day trading means you're making, quarters and dollars. You can only be losing quarters and dollars. So you got to take a whole bunch of small little losses in there. Day trading, I think, is just a colossal waste of time. When you could probably, most day traders could probably just buy the market, go away, and make 4 or 5 times as much money as they're making right now with a lower tax rate, much lower tax rate. Day trade, the shorter the time period you're attempting to trade something, the more you have to rely on luck. The more you have to rely on luck, because day to day that market is random. So you're trying to make sense of noise. Get day trading out of your head. No. Most day traders disappear. Most day traders blow up. Don't do it. Are you a fan of sports? I used to. I don't really have the time anymore. Anything exciting in the financial sector? Canadian banks. I like Canadian banks more so than American banks. I do like Canadian banks. Any updates on the financial modeling certification test? Well, we're now into the new year, and I said it would be early in the new year that we'd be doing it. So yeah, you'll look for something on that in the next few weeks, but that will be based on the Costco model. And that upload our Costco. That's exactly what you'll have to do. You'll have to send me your completed Costco model, because I didn't give it to you. I didn't supply you with the model, so you would have had to have gone through all the steps to build the model. So you'd have to send me your model. That is absolute proof that you've done it, because I never gave it to you. I never gave anybody anything on the spreadsheet. You had to build it all yourself from scratch, as you were following along, of course. And of course, you're free to make your own decisions in the assumptions. Maybe some of you have. Hopefully you played around with that. But yeah, it will be in the next couple of weeks. We just got to get through the 15th. Once the 15th is done, because we're switching over to a new pricing on the 15th and a new membership model on the 15th. Once we're there, then off we go. We still have the second part of the Costco model, which is the valuation part. We just did the forecast. Now we have to do the valuation part. How do you value this thing? Keep in mind, this is a US GAAP company. So its property is on its books at historical cost. Well, that property's worth billions more than they have it listed for. Billions more. So we're going to have to think about that in the valuation of what do you do with these assets that are listed at historical cost, not fair value. What did your dad do for a living? Beats the hell out of me. I never knew my father. Well, I mean, when we're talking about biological, even from a familial setting, I never had a father. I grew up with a grandmother. Never had a father. Never knew the guy. It was the 60s. It was a time of more freedom, we'll say. So, maybe he didn't even know. Taxes would eat your gains day trading. Yep. Taxes would be a bitch. Most day traders, if you calculate a Sharpe ratio on day traders, it's absolutely horrific. They think they're making money because I made 20 bucks, I made 50 bucks, I made 80 bucks today. I didn't even have to work. They think they're making money, but once you consider the risk that you took, the after-tax amount that you have, the income that you gave up to do this, you're not making anything. You are losing. You would have done better by buying an apartment REIT, something simple and dumb like an apartment REIT, and going to get a job. At the end of the year, you would have more money than if you day traded. If you're going to quit your job and be in the market, you need a significant amount of capital. At least 250,000 would be my guess, as a minimum 250,000. Unless you're good, unless you're really good and you have years of experience in a particular industry. But if you're 25 and you don't want to work, you want to go home and play on Robinhood, by the time you're 25 and a half, you'll be looking for a job because you'll be broke. Don't do it. Don't do it. Don't do it. Don't do it. Trust me. Don't do it. Right? What are your thoughts on the Christopher Divock story, if you've heard of it? Don't know who Christopher Divock is, but let's do a quick Goggle search. Christopher, what's his name? I guess I've lost it. Okay. DE? Oh, Divock, there it is. Just let something come up. Day trader says he made 306 million on Tesla. Didn't this guy make it all, then give it all back? Didn't he make it all, then lose it? Is now suing RBC, an accounting firm, for not. I read that story before, that he made it and then lost it. So, like, you can get lucky. You can say, if there's a wave going on and you ride that wave with leverage and you just keep doing it and doing it and doing it, and that wave keeps going, you can get very lucky. But then he gave it all back, and now he wants to blame somebody for it. He gave it all back, and I guess he's suing RBC or something, and an accounting firm, for not advising him to get out, or whatever the case is. But you can get lucky. There's, nothing wrong with that. You got to, like, first of all, if you have 88,000 and you turn it into 400 million, and you keep playing, like, at 50 million, you should have stepped out and said, I'm good. This is life-changing money. I'm good. So I think he was his own worst enemy. But this is common with day traders, not 450 million. You hear about that. That's one story. What you don't hear about are the millions and millions and millions who blow up in 3 months, much like lotteries. I mean, why don't you say, that's one story about a day trader who did well. Why don't you say, look, somebody won a $50 million lottery this week, and last week, and the week before, and the week before. Every week there's somebody winning a $50 million. What do you think about me putting all my money in a lottery tickets? I mean, what would you say to that? Right? There's a winner every week, but what they don't show you are the millions and millions of losers. The millions of losers. So you have that story about one guy, but what you don't have is the story about all the no-name people, all the people who lose almost everything they have. Almost everything they have. They even have, how you have Alcoholics Anonymous, Gamblers Anonymous. There's even a rehabilitation program for these kind of people who just can't help themselves but gamble in the market. I would try to stay away from that. Will the valuation component consider 3-4 factor model? Probably not. I don't know that getting fancy with that kind of valuation really really matters. I think you can do and I don't even know well, with Costco you can do we'll probably do a free cash flow valuation. That probably makes the most sense because they do have an erratic dividend, and they do have cash that builds up. We'll probably do a free cash flow valuation, and then a multiple, and also adjusting the valuation for the change in the fair value. So after you come up with a valuation, adding on to that value, that market cap, that you get some adjustment for the fair value of the properties. Oh, what time we got? 9:44. I'm going to finish up soon. Yeah. What is worse, dying with 50 million in the bank and doing nothing exciting in your life, or dying broke with a life full of experience and joy? You see, you're asking that question from your point of view. You, to each his own. Maybe the person who dies with 50 million in the bank, when you say didn't do anything exciting, by your measure, didn't do anything exciting, but maybe did something very exciting by their measure, something that brought a lot of meaning into their life. I don't know that I would look for the word exciting. Did the person live a life of meaning? Period. Doesn't matter. Doesn't matter. If you have meaning, the money is not that. How can I explain it in an easy way? It doesn't change much about you at all. What it does do is it eliminates a lot of the small shit in life. It does that for you. If you have no meaning in your life, then money is everything. And then you most of those people end up going through it very quickly, and then they end up broke. Nothing wrong with dying with 50 million. If it then gets handed down to good organizations, or good targets that can then use it for something. I don't know that it has to be spent, right? Does it have to be spent for you to have lived a good life? I don't think so. That's just me, but I don't think so. I know that I will never spend what I have. I know. The pace at which I spend versus the pace at which it grows, I would have to dramatically increase my spending just to get even, just so that I'm even. Then increase it even more to start depleting it, and even then, I could never outlive it, unless I really, really go crazy, which that's not my style. So I don't know that I would. I think what you're giving are two ends of a spectrum. I think most people would fall in between those two ends. I'm evaluating a local company. Should I add a country premium even if it's for local investors? Not really, no. If you're not investing across a border, if you're just investing in your own country, then the only country risk you have is your own country. You're not taking on any country risk. You're in your own country. What kind of experience being broke, like collecting pennies for a burger? I don't know what that's probably not directed to me. Are you happy? Yeah. Happy is more of a, I would say that I have good meaning. There's a reason why I get up every day. And for the most part, at the end of the day, I don't have problem falling asleep because there's big things missing in my life. So no, I'm pretty good with everything. Okay, I think we're good. Yeah. Bears been getting wrecked for 75 years, but they never give up. Well, I don't know that you could make a statement like that. There are dedicated short funds. There are at all times, companies that you should be bearish on. There's always something that's overvalued. There's always something that's not worth what it's worth. There's always some company doing something funny that some analyst somewhere figures out and says, this is messed up. So I don't know that I would say that being short has gotten them wrecked. But if you've been short the market for 75 years, and then you're an idiot. You're a general idiot. But there are pockets of the market at any given time that you can be short on. According to reports from Globe, Trudeau might resign. Yeah, good. And I've answered all of those, and I think we're done here. I think we are done. All right. Can you talk about an alternative method to take the CFA other than having a degree? I don't actually think you need the degree if you have life experience. I don't think you actually need the degree. I think CFAI has a carve out for that. That if you have a career behind you where you've already worked in the field, that you don't need the degree. That is something I think that you'd want to speak with CFAI about. Okay. Let's call it there at 9:51. And it is, how are we doing in the market here? I think we're still red on the futures. Yeah, still red on the futures, but hard to say what to expect the next day, right? Nothing interesting in currencies. Canadian seems to be the biggest mover here. The Canadian strengthened. Bitcoin's up 0.62%. That's about it. We'll see what tomorrow brings. It's a short week again. Monday, Tuesday, Wednesday. Thursday's off. Then we come back for Friday with the jobs report. And 3 earnings. All right. Yeah, we'll let the last few questions go. That's it. It was a short one, 2 hours, 37 minutes. Normally I get to about 3 hours, but I am yawning. I'm a little bit tired, and I think it's like negative 14 degrees out there, and I got a hot tub. So I'm going to sit in it. Ciao, guys. Bye.